Welcome to Markets Now. I'm Michelle Roque with Kent Beadle with Paradigm Futures. Well, we have the livestock futures trading mostly higher now after a little back and forth action in the cattle early on, with the grain trade seeing a little bit of pressure here. And Kent, thanks for being with me. Let's talk about soybeans first of all. We saw a correction well off the highs yesterday, and I know we didn't have a lot of news really to drive the market, but was it just profit taking? Were we just a little bit overbought, or what happened? And
Well, you
why
did,
are we seeing follow through today?
yeah. So yesterday you did see the energy markets correct lower,
Right.
and the crude oil market back underneath $70. A fairly sizable correction in diesel, and that finally put some pressure on the soybean oil market. The soybean oil market has been, absolutely on fire, in sympathy with, world veg oil markets, a very strong palm oil market that had made new contract highs pretty much every day last week, including to start yesterday. But now palm oil is also starting to correct, and you know we uh, uh, we see some pressure on the soybean oil that started yesterday, is occurring again today, and is putting some pressure on the soybeans as it impacts U.S. crush margins.
Yeah, but we were kind of due for a correction anyways. And from a technical standpoint, I think we closed below both the 100 and the 50-day moving average in the January contract, didn't we?
Yeah, we did. We never were able to get the beans above the 100, but we had managed a couple of closes above the 50-day last week, and
Okay.
we ended up back below that. So that, I think that a market that had closed 5 consecutive days higher was definitely overbought and due for some corrective activity, and we certainly got that starting yesterday, and we're seeing some follow through today.
Right. And we still have that big South American crop coming. It looks like they're getting planted. They've been getting some rains.
Yeah,
When we talk about a big crop, it could be much bigger than last year. So that's going to continue to be a headwind for that soybean market, isn't it?
well, it could be, and I stress the word could, okay? Because we talk about the size of the South American crop possibly being much larger every single year as
Right.
acreage increases. Weather is good now, but we are a long ways from determining soybean yield in Mato Grosso and the rest of Brazil. It should be understood that we make our yield during flowering and pod set and pod fill. And as we clearly saw in the United States here this past year, we need ongoing moisture through pod fill if we are going to achieve the kind of good yields that everybody seems to want to trade, just based on the fact that we now have enough moisture in the ground to get that crop planted and up and established. We are a long ways away.
So the corn market this morning, we had some more demand coming at the market, a little under 5 million bushels to Mexico once again, and demand has been very, very good here.
Very good.
But yet we're lower with the wheat market kind of dragging corn down, right?
Yeah, and of course we ran into some technical resistance too in the aftermath of the crop report on Friday. Those old highs at 434 and a quarter. We exceeded them briefly, but it did trigger some new farmer selling and some profit taking from late longs going into a weekend, and then we didn't have any new fundamental news yesterday, really. But the market probably also in corn is a little bit overbought, and we're just not going to go straight up. It's despite the very strong demand, we're going to have some farmer selling. We're going to have some corrective activity, and we're in the midst of that here today.
Yeah, basis though has been strong. We've seen the forward spreads working, so that's
Yeah.
really an indication of strong demand, isn't it?
Yeah, what it tells us is that the marketplace needs more corn moving into the system than it's able to buy at this price. That's the whole point for higher futures prices. It's the whole point to have a bullish outlook on corn right now. But as I told my clients in my letter this weekend, we are not going to go up every day. We are not going to go up every week. we're due for some corrections, and we're seeing that right now.
Right. Now, the wheat market is trading lower this morning. And of course, we came well off of our lows yesterday, but we've really seen the market, take out weather premium, or has this been all technical?
Some of it's technical, but there's little doubt that the rainfall that we had over western Kansas, Oklahoma, and Texas here over the weekend were important. Um, the old adage that wheat had 9 lives, and of course, we're off to one of the worst starts condition wise in our history. We did not get a new condition report last night because of the government holiday. But certainly the market is anticipating today that we will see another 3 to 5 percentage point improvement in the good to excellent category. And so ahead of that condition report, I'm not surprised that we're seeing some further pullback.
Yeah. Do you think, I mean, there's been a lot of chatter about maybe war premium being pulled out of the market because of a possible deal in the Black Sea being brokered by President-elect Trump. Do you see that as a factor here?
I think that those types of things are market factors, but I think the marketplace gets a little bit ahead of itself when it starts to try and determine, what the impact of something that is now going to take place, but is not going to actually occur until inauguration on January 20th at the earliest, and then will happen in its own due time when the new president decides to tackle various items on his agenda. And he has famously said that he will solve this issue and bring peace before he even takes office. That's a really, really difficult thing for him to do at this point in time, given the intransigence on both sides in that area.
Yeah. Technically, wheat market has gotten beat up. We took out some areas of support. Like we said, though, we did come off of lows yesterday. You thought that was an exhaustion, but can we hold these areas here?
I think that we're going to retest those lows in Chicago. Again, because of the potential, improving conditions report. But technically, we've started to get cheap. And I do think that these lower wheat prices, when we've seen them here before, they've served to stimulate some demand. And I anticipate that will be the case here once again.
And cattle also had kind of similar action. We went down, made new lows for the move, and then we bounced and closed higher.
Yep.
Do you think we can build on that in that market?
Well, we're trying to today. Again, cattle had gotten themselves somewhat overbought. Cattle were due for a correction. We started to get that last week. Ultimately, the key is going to be how is cash markets going to trade this week? Are we going to be able to get some recovery in the cutout? Cutout got hammered last week, and my gut is that we probably have a little bit more corrective activity in front of us yet. So call this the correction of the correction. Kind of expect that we may see some new lows yet in cattle, but over the long pull, we still see underlying supportive fundamentals and the possibility of new highs yet in front of us at some point in the future.
Yeah, even bull markets have to correct at some point. That's healthy. Hog market, when is that market going to correct? We're back up to new contract highs. The funds are record long. What's been pushing this? I know the futures are at a discount to the index, but what else are these fund traders? What's everybody buying it for?
Well, you did see some turnaround in the cash and in the cutout here over the last couple of weeks. This has been a contra-seasonal type rally. Now we saw weakness in the nearby December futures last week. It looked like maybe the cash was starting to run out of steam, but now that's kind of the contract that's leading the way higher. You mentioned the discount to the index. That's part of it. And there's just likely some underlying demand that we're just not able to put our finger on right now. It isn't necessarily showing up in the weekly export reports, and yet it certainly feels like there's some export demand somewhere that's keeping everything well supported and seemingly defying gravity, considering the large speculative position that we have and the very negative seasonals we typically have at this time of the year.
Yeah, it's been interesting to watch, as we've talked about before. So hopefully it's an opportunity for producers to get some hedging done, right?
Well, there are margins out there to be able to to lock in, and we see this expensive livestock market is certainly supportive for corn, and clearly if you're going to hedge these margins, you're going to be buying corn, but it is an opportunity for livestock producers to lock down some profits, and that's not always available, especially at this time of year.
Yeah, good advice. Thanks so much. Kent Beadle with Paradigm Futures. Remember, futures and options have substantial risk. This is Markets Now.